it is John Fibonacci. Welcome to my YouTube channel. All right, today we're going to be going over whole numbers, and it's a reimagined version. All right, I've done this before in the past multiple times. I've even done whole numbers on other YouTube channels like Guinevere's Forex and Chill. That was the very first lesson I did for them, and that's on her channel somewhere out there. I know it's there. Okay, but I'm doing a reimagined version. All right, just a little bit more up to date, a little bit something different. Well, not different, but a little more advanced than it was from like 2 years ago or however long ago. It was a long time ago. All right, so yes, whole numbers reimagined. Let's get it. So the learning objectives for today: what are whole numbers / handles? How these levels are useful in technical analysis? And of course, price action examples. If you enjoyed today's presentation, feel free to check out the Quarters Theory book by Ilyan Yotov from Wiley Trading. Wiley Trading puts out some pretty good stuff. All right, they have well over hundreds of books by various authors, and although I haven't read all of them, I've read quite a few of them. This one I did not read word for word. I've skimmed through it. Well, there it is. Okay. When I first started, teaching the whole numbers, I kept getting questions. Is this Quarters Theory? Is this Quarters Theory? And I kept saying, I don't know. I've never read it. So it was after that, after a certain number of times you get asked the same question, right? You just got to go figure it out. So I actually went and got Quarters Theory and, skimmed through it. And I did realize that there are a lot of similarities here. So in a way, I guess you could call it Quarters Theory. It doesn't really matter what you refer to this as. The whole numbers, some people refer to them as psychological levels and stuff like that, which I don't really believe in anymore. I don't believe that the psychology of it moves the markets. I think it's the actual orders, like the banks, hedge funds, and stuff like that, that trade around those levels, and not necessarily just having it, be a psychological level. I just don't believe in that. Okay, but you got to give credit where it's due, and this is going to relate a lot to Quarters Theory. Okay, so what are whole numbers, right? What are handles? So as per usual, guys, I use Investopedia.com. You can go to their terms, or the dictionary, if you will, or you can go up there to at the top right. There's that search bar, and you can search something up, and they usually will have a definition for it. Okay, so what is a handle? A handle is the whole number part of a price quote. That is the portion of the quote to the left of the decimal point. For example, if the price quote for the stock is 56.25, the handle is 56, eliminating the value of cents in the quote. Handles are often used in futures and equities markets, where they are also known as big figure or big fig. Okay, in Forex markets, the handle refers to the part of the price quote that appears in both the bid and the offer for the currency. For example, if the Euro USD currency pair has a bid of 141.83 and an ask of 141.85, the handle would be 141, the part of the quote that is equal to both the bid and the ask. The big figure. Okay, the term big figure refers to the stem or the whole dollar value of a price quote. It is most often used in the international currency markets, where it is often abbreviated as big fig. In the United States, big figure is also referred to as the handle. All right. And of course, you're more than welcome to go onto the website, Investopedia.com, and look up these terms and read a little bit more about them. Kind of, look at some examples and further reading if you want to do so. I recommend it. But for those of you who may not know what they are, now you should pretty much know. All right. And of course, it's a lot easier to see in the charts, but we got to outline the definitions first. Okay. How these levels are useful in technical analysis. So the whole number, right, or the handle, if you want to call it that, I've called it whole numbers for such a long time. I think it's easier to say handle. So it really just depends on whatever you want. It doesn't matter. But for sake of ease, I guess we'll just call it handle moving forward. Okay. But basically, what they are is horizontal price points, right? That's all it represents is a price. And what you'll find is, let me pause for a second. I don't believe in support and resistance, okay? But you will find that these price levels can sometimes act as turning points in the market, or to simplify it, I guess you could say support or resistance levels. But since I don't believe in that, I'm just going to say turning points, right? They create turning points in the marketplace, all right? And, well, there it is. So what I expect for price to do, right? Like let's say price was coming down to a handle, right? I expect to trade, or I expect the price to trade through the level and reverse on a short-term basis. And of course, at certain points, it will sometimes do a long-term basis, right? So it'll be a short-term reversal, which later on ends up being a long-term reversal, right? But it's not going to be a long reversal every single time. A lot of the times you will see a short-term reversal, and sometimes you won't see it at all. It'll just trade right through it, and that's it. But you have to filter out, certain handles or certain whole numbers, and we'll get to that when we get to the charts as well. Okay, and I'll kind of give you a little filter on how to anticipate when it's going to work and when it's really not going to work, most likely. Okay. So here we have USD CAD, right? Also known as the Loonie. And I've got some up on here for you already. These are the black lines, right? The horizontal lines, like I was saying. And it's not like a trend line, but all it is literally just displaying the price. That's it. Okay. So I want you to look at this chart for a second, and we have more examples, but I want you to look at this chart for a second, and hopefully you can kind of tell like there's some validity here, right? Where you see price that is reacting, right? Price is responsive to these levels. And I'll go ahead and highlight some of the examples that I want to point out to you. So I'll use my mouse for this portion. So here, right, we see price has been in a downtrend, and then we see it smack into 126, right? And you see how the price kind of trades through it, and then it reverses, right? Now, this may not seem like a lot on this chart, but if you go down to the small time frames, I mean, this is like 60, 80, 100 pip moves. This isn't 100, but, this is around that, because you see it 126, and then you see it come up to like 126.50, but it had traded about 20, right? So 50 and 20 makes about 70. So this is about a 70 pip move here. Okay. So it's not a lot. It's not going to be a home run trade, but, we're seeing the reaction from there. And then once it kind of trades through a few times, and like let's say price comes down, then it comes back up again, and we're anticipating a reversal higher. If it doesn't give that to us, right, price makes multiple attempts down in that 126 handle. And this is what I'm talking about. Sorry, the 126 handle. Okay. And if it's not going to reverse higher, then it just seems like it's going to trade lower, in which it does. Okay. So when it breaks 126, right, what does it come down to? It comes down right to 125. Okay, so 1.25 handle And to me, that would qualify as a quarter level, actually, because 25, right, is a quarter level. 25, 50, and 75. Those are quarter levels. Okay. So price did react from the 126, but it broke. Not a big deal. Now, the 125 was very responsive, right? Very, very responsive, where we did trade through it, right? Just like the last slide, we traded through it, some, and then we reversed all the way back up to like 127.40, possibly 127 and a half, so that's well over 200 pips to the upside from the actual handle. Okay. So yeah, very responsive price action from the 125 handle. And we see price comes back down to the 126 level again a couple of times. And, we trade through it a little bit, and then eventually we reverse as well. Okay. And there's obviously going to be other things that would qualify this 126 level here being rejection to the upside. You've got some lows over here and stuff like that. So, we're not going to get into all the details, right, of the way that I trade, but obviously the video is geared towards whole numbers, so we do expect that price can do certain things around these levels. All right, this time we're looking at the micro E-mini Dow Jones Index Futures and the March 2021 contract. All right, and it doesn't really matter if you look at the micro or the regular E-minis. It's pretty much the same thing. If you're going to trade them live, it's absolutely not the same thing. The math is very, very different. But in terms of price action, it's going to be very, very similar. Okay, so the Dow Jones pretty much. And I know a lot of Forex traders trade CFDs as well. And so for you guys, that would be US 30. This essentially would be the US 30 chart. All right. But your pricing, again, if you're trading CFDs, may be a little bit different from the futures. All right. So just be mindful of that. Here we are. Okay. You see price, how we kind of consolidated a little bit. And then we finally made that run higher up to this level. Okay. And so that level is 32,000, right? So 32 even, right? That's the handle, 32. Okay. So there it is, acting as, a lot of people would look at this as resistance, right? And to me, it's a turning point in the market. And then we actually come down and break the most recent low. All right, so the market was definitely bearish, hitting 32,000 and then trading away from it. Now, if you want to add a little bit of context, the Dow Jones going to 32,000 was actually the very first time that it's ever done so. Okay, so there's kind of one example of what it is that I was talking about, right? How do you know if a whole number is going to be respected or not? Well, this would be a fresh level because this is the first time that 32,000 has ever been met. Okay, so in my opinion, it may not necessarily be the market shorting from 32,000. Obviously someone out there probably took a position as a short at 32,000, but I think it's more of a profit taking, right? If the market's been on an uptrend, even though this is consolidation, another up move in the market, any of the buyers who were in here holding on to a position, or any of the buyers that were bidding this price higher and hitting 32,000, at some point you do want to take profits in the marketplace, right? You want to pay yourself and get out. So if you have buyers who are selling, right, then boom, there it is. If you have more sellers than buyers, market goes down. Okay, so these levels, like I said, are turning points that can, also be used as profit taking levels. So not necessarily shorting. You don't have to short, but if you're in a long position, maybe you could exit. Or if we're in a short position and the market comes down to a level, then we can cover our position, right? AKA closing a short position. Here we have the British pound, right? GBP USD, also known as cable. So we see kind of similar to the Dow Jones, right? GBP was on a bull run, minor pullback, up move, minor pullback, up move, very small retracements, and run straight up into the 1.42 handle. Okay, there it is, the 1.42 handle. So just like one of the first slides I showed you, right? But I showed you a buy position where we expected the market to come down to a level, trade through it, and then go higher. It would be the reverse for the opposite, right? If price is coming higher and higher, we anticipate that to be traded through and then trade lower. Okay. The 142 level as well, just like the Dow Jones for cable, 142 was also very, very fresh. Means that 142 has not been traded to for a very long time. You're more than welcome to and encouraged actually to go back into your own charts, daily, weekly, monthly, 1 hour, whatever time frame you want, and you can tell that as of early March 2021, okay, actually this was late February of 2021, the 142 level has not been traded to for a very, very long time. All right, so 142 would be fresh in my opinion, and we see that post bull run market is a reversal. And also I was signifying to all of our viewers here that the market would, I'd look for a shorting opportunity in here because of this, right? We came up, rejected, came up one more time, fell through. And so on this retracement, I was indicating that I would look for a short position, and the market currently is trading, let's see, 200, 350, about 300, 350 pips lower from that level. All right. And that was why I had called it, because of this handle. Okay. And it was that simple, right? Such a simple concept, right? For hundreds of pips. Beautiful. All right. But continuing on with cable, we also see the 1.4 handle, right? And we see that it does trade through it. It comes back down again, and then we end up revisiting this level a couple more times before trading lower, okay? And so this is kind of what I mean. Like when a level has been traded through multiple times, I don't particularly expect for the handle to act as a turning point if it's been traded to multiple times. Okay, so and see, like even as of right here, like that 140 level, we come up, come back down, come back through it, and then just continue on higher. And so, after 2-3 times, I'm not expecting it to hold, and then it doesn't hold here, right? It went through it here and then just blew through it here, which was later a turning point to go lower. But for the buy, you would have got crushed if you were trying to buy it on the way down. Okay. Oh, there's the 1.4. And even creating the low of the week, actually, is the 1.38 handle, right? See how we came down off that 1.4, came down to the 1.38, traded through it a little bit, and then reversed. So I wouldn't have taken this as a trade, but for a day trade, I mean, there was definitely 30, 40, 50, 60 pips to the upside on an intraday basis. So if you're a day trader, there was definitely some pips offered on this particular day. All right. One of my favorite assets to trade, at least the most common asset that I trade outside of the currency markets, is the S&P, right? I actually trade the micro E-mini S&P 500 futures. This is the March 2021 contract. Okay. So this one doesn't have a zero level here that I was, well, the other day I was trading off the 138, and I'll get to that in just a minute, but there was actually a quarter level here. So I do want to give you an opportunity to look for it before I show you. Okay. So if you look on the right side of the chart, right, on the left side, you got candlesticks, yada, yada. But on the right side, that's where you have price, right? which I believe is one of the most important things. And see, this is one thing as well. While you're looking for that level that I'm talking about, that I'm about to show you, I do want to talk for just a second, because, a lot of traders always look left. They look left for whatever, fib retracements, obviously, welcome to my channel, right? Fib Logic, okay? And structure, there's all type of technical analysis tools that requires a trader to look left into price history. But I know that the majority of traders don't look both ways. They look left, but they don't look right, where the price is actually displayed and how important the actual price is. Okay, it's very, very important. All right. But anyways, so hopefully you were able to find the quarter level that I'm referring to. It's actually not displayed on the chart. The chart is currently displaying 0 levels or even numbers, right? 60, 80, 0, 20, 40, 60, 80, 0. And the quarter level would actually be 750, right? Remember what I said earlier? The quarter levels are 25, 50, and 75. So on this particular chart, that would be 3,750, right? So you can see that the last 2 days, which I believe, let's see. So today's Saturday, March 6th. So that was Thursday and Friday, which was the 4th and the 5th. Okay. So March 4th here, down candle. March 5th here, up candle. Okay. So we can see that on the 4th, right? Price was coming down past the level and then closed above it, right? And then again on Friday, we come back into it and then trade higher. Now, why would Friday do that, right? This is actually the weekly, right? So the weekly candle came down, wicked it, and then came back up again, right? So this number to me, it may not exactly be fresh, right? Because if you look left, we traded through it a few times. However, you do have to add other things, right? There are other things that I use, right? Other tools in my toolbox, right? That I've shown you guys on this channel. So what would that be? And I just mentioned it about a minute ago. Fibonacci Logic, right? Buying the 618 or the 786 retracement because, why would you buy above the 50%? Okay. So, in a way, I guess, this would be Fib Logic episode 8, I guess, but it's the entire presentation isn't on the Fib Logic. So we'll have to do part 8 another time. Okay. But when you do a little bit of confluence, right, we're below the 618 level. We're at that 3750. Okay. And we actually came all the way down to the 786 right here. Right? But on a longer term basis, that 3750 level was being respected on the daily time frame. And on Friday, if you had taken a trade going long, you would have done very well. Okay? And yes, or if you could have bought Thursday's close, you would have took a little bit of drawdown, but Friday was a good day. All right? I believe the S&P was up about 2%. I think it closed just below at a 2% gain here. Okay, so beautiful. But yeah, that's confluence, right? Fibonacci logic with the whole numbers. Okay, beautiful. All right. Next up, a trade example using whole number concepts. All right, guys, we are looking at the micro E-mini S&P 500 index futures. The contract is March 2021. So this trade was taken, I think it was Thursday, the 4th. Yes, it was Thursday. I didn't want to trade on Friday, right, for NFP, and wanted to be out, really take it off. Okay, a 3-day weekend, whatever you want to call it, and that's it. So what I was anticipating was higher pricing. All right. So I was looking for a buying opportunity, and what other way to measure a retracement than the Fibonacci, right? So when I took the low set from the previous day's evening session up to the high that was right after the open, we got a retracement lower. All right, so this is what that retracement looks like. If I can get it to go to the... All right, there we go. So you see we have the low up to the high. Then we retrace down to that 618. Okay. Now, if you also notice, right at that 618 level is also that 3,800 handle, right? See if we, whoops. If we take that over, right, over here to the right, you can see clearly that it's 3,800. So to me, okay, this was confluence, right? That 618 level, 3,800. And, you know, just like earlier in the slide presentation, right, we traded through it and then reversed. Okay, so that was what I was anticipating. And I didn't mind the drawdown. You know, sometimes it happens. All right, we can go to 5 minute. Maybe it's a little bit easier to see. But we're going to go back to the 1 minute when I show you the executions, you know, of the entry and the exit. Okay, so we had the opening price here, and the first initial move was higher. And all that is, in my opinion, I think they're just enticing buyers, right? And then by the time that people are chasing price going higher, which is why I don't do that, okay? Buy low, sell high, not buy high to sell higher, okay? They, excuse me, the market rallies higher, and the traders who are chasing price, okay, they get destroyed when the market trades lower, okay? So we trade down to 3,800. I bought it. The market came down to that 786 level, and it actually had made a new low here. Not by much. Oh, that's not the one. This is the one. All right, so it barely made a new low here, and then we rallied away. Okay, so by the time, you know, price was trading higher and higher, I think it was on this initial move here, I went ahead and was able to put my stop at a break even +1. I think it might have been 1.5 because I was kind of lazy. Instead of typing it in, I just manually moved it. So my stop was there at break even now, +1.5 for commissions. Okay, and you know, I wanted to let this thing ride out. And when we came up into this around 10:30, 10:45, I'm going to take the fib off now, and we'll just leave that there. But when we made a new intraday high, okay, a new intraday high here, we started to trade lower, and I went ahead and decided to get out of the trade. I believe it was 38, 33.5 was my exit. So I secured 33 points, 33.5, I guess you could say, but I'll just round down to 33. It's a little bit easier to remember. The market later rallied one more time for a couple of points before it absolutely just took a dump and went lower. All right, just big time. Broke 38, went all the way down to like 37.20. Okay, intraday, and it wasn't looking good for stocks. Okay, a lot of stocks were red, and it was rough. Okay, so even though I would have done a lot better going short, I know that's probably what some people's initial thought is, like, oh, John, obviously the move was, you know, way more, you know, to the downside than it was to the upside, right? Because your upside potential was from this low to that high, but the downside potential was from that high to this low, right? So obviously shorts would have been better. But, you know, sometimes I don't want to think that way. You know, I'd rather say, you know what, it was a good day because I was able to catch 33 points, even though there was more to the downside, because I was looking for a buying opportunity. I was bullish, stuck to my analysis, took the trade, and that was it. All right. Now, given Thursday, right after it unfolded on SPY, right, the S&P 500 ETF, okay, SPY, I went ahead and bought like right before the close because I anticipated that Friday would be an up day, but I'm actually going to be holding that for a while, provided that Monday doesn't break Friday's low, okay? But nonetheless, before we get to the higher time frames, what I want to do is delete everything here, drop back to the 1 minute, so that way you're able to see the executions, okay? So what we'll do here is just go to the settings, and then obviously the chart settings right here, show executions, and here we go, okay? So on the way down, okay, 3,800, that was for the buy, draw down like I mentioned, and then we trade higher, and then the exit candle right there. And I wish there was a way to, those execution arrows, right, the blue arrow and that red arrow, I wish there was a way to make that bigger, because I feel like they're kind of like really, really small. You know, I wish there was a better way of displaying that, but nonetheless, there it is. And that's it. Okay. Now, I was watching this, right? Like I hopped out and then I continued to watch price, and I was like, okay, like let's just kind of see what happens. Didn't plan on taking a trade, but let's just kind of see what happens. And then we ended up dropping off here, and I thought to myself, okay, well, we're probably going to have an intraday retracement, like a deeper retracement. So we rally one more time, high, low, maybe a fib if you were looking to short. And if I was in this, I would have got out here anyway, right? And which was around 38, 34. So I really would have exited here if I had held on to it. So really, just because I got out a little bit early at the time was really the ideal exit, to be honest, because you don't really know when the high of the day, right? Like I didn't know at this time this was going to be the high of the day, But then we dropped lower here, retraced higher, and I was thinking to myself, yeah, if I was still long, I would exit right here, And I mean, I did not expect this, to be honest. I did not expect for price to come all the way down here. It was crazy. All right. And then we actually had a nice little rally at the end of the day, a little pop the last couple hours of the day, which was pretty cool. All right. But if we go ahead and take the arrows off and the executions off, okay. All right. So right here, if we have the daily low up to the high, that 3,800 level, it did happen to be below the 50% of the overall fib level, but we ended up coming down to that 618 and actually bottoming out at the 786. All right, so once Thursday closed, or heading into the close, that's why I picked it up for Friday, to hold through Friday, anticipating that it would be an up day, because we came down, obviously respected that 786 level. And then, like I already showed you in the chart from earlier, that 3750 level. TradingView sometimes doesn't give it to me. Okay, 3750 level. I figured that would be intra-week support, right? Intra-week support, meaning that the weekly close would be above 3750, and we closed at 3839. So I was right about that. Okay. And then obviously, you can kind of eyeball that fib. All right. So now we're trading higher from there. So, not the greatest trade, okay, that I've ever taken. It wasn't much, but hey, profit is profit. All right. And that's it. So, the things that I teach you guys on this YouTube channel, and especially what I teach on Go Live, like this is, I do this, like I actually take trades with the same things that I teach you guys. It's not like I teach you something that I don't use. I really do this stuff. All right. And yeah, that'll pretty much be it. So whole numbers, guys, whole numbers or handles, whatever you want to call it, doesn't matter. If you want to go into your own charts, I encourage you to do so, and take a look at whatever asset you have. It doesn't matter. Whatever you like to trade, gold, silver, whatever currencies, the cross pairs if you want. I don't know why you want to trade the cross pairs, but if that's your thing, that's your thing. All right, indices, of course, stocks as well. I mean, whatever you guys want. All right, here I'll give you a little bit of flavor. A little bit more flavor. Let's look at the metals real quick for silver. Okay, so silver, right? If you do some quick analysis, right? What do you notice right here? Okay, right up there where the mouse is at. Okay, you guys should be able to see that. That's 30, right? What happened at 30 on February 1st, right? We smacked into 30, and now we're trading lower, back down to 25. And I called 30 back in like November, December, and January. All right, I was calling 30 by the time that March came around. We ended up getting that on February 1st, so my timing was it was off, but it was good to be actually a part of that, of this move in here. All right, and if you do want to study silver, if you go and mark up 25, okay, in this area, low, high, 50%, also that 25 level, and then from 25 it rallied straight to 30. Okay, straight to 30. Beautiful. And this, guys, being a part of this, beautiful. I promise. I wasn't a part of all 3 days, but the first half of that move, amazing. All right. So anyways, that'll be enough. We could go over so many more assets. I mean, it doesn't matter, but I will leave that up to you. That's what I want you to do. And it's exactly what I did to learn how to do it. All right. Is just go into your charts, take those horizontal lines, mark them up, throw them on there. Okay. Throw them on the chart and go take a look at all time frames. Okay. At all time frames. If you want to start on the monthly, you'll notice that the monthly candles and the weekly candles are the ones that typically respect these levels the most. Okay. Meaning that the candles will close above or close below whole numbers. Okay. And that'll pretty much be it. All right. So guys, I hope you enjoyed today's presentation. I hope you enjoyed the video. I had a lot of fun making it and recording it and editing it. All right. And, I hope you learned something. All right. So if you haven't already done so, like the video, I would appreciate that, and subscribe as well, so that way you don't miss future content. All right. I look forward to making more stuff for you guys, and that's going to be it. So have a blessed day, and I will see you in the next video.